Hey everybody, it is so good to be back here live on the floor of the SIBO and the S&P 500 options pit. Yes, this is real. Last week when I did this and I had that background up there, no, that was just the background. This is real. Um, Unfortunately, not a lot of trade today. It's actually fairly quiet with the markets very muted, though. Just over the last couple minutes or so, we have seen the S&Ps dip negative again. There's always all sorts of rumors out there. I'm not even going to talk about any of those, but volume today very, very low across the board. Right now, we've got S&Ps down 2 points. We've got the Nasdaq up 11 points. We've got the Dow down 33 points. Again, very muted trade, especially given the landscape out here, not just politically, which we're going to talk about today. What the presidential election means for the markets. So, not just politically, but with everything else going on in the world right now, earnings, right? After the close today, man, we've got Alphabet. I still call it Google. We've got Tesla. We had all the banks last week. Now, all the big tech names, the NASDAQ names, they're going to all start popping up left and right here. This morning, boy, UPS, what a stinker this morning, on par for its worst day ever today. Is that a sign that consumers just aren't shipping things? Are they pulling back? Who knows? Who knows? But then later in the week, Thursday, we get GDP and we get PCE. That is the Fed's favorite inflation gauge. That's going to be a big one, guys. So even though, right now Vol is just kind of hanging in here, and I should have talked about it, the VIX is only down 32 bips, trading 14 and a half right now. So even though there's not much going on, there probably will be some excitement here later in the week. All right, so let me give you a quick recap besides the big indices of what's going on here. I had mentioned UPS already. What a stinker. Gold is up a little bit. That was down yesterday. Alphabet is up about a buck right now. It's been hovering there all day, and in fact, for one of our positions here at Prosper, we probably need this thing to trade 183 and a quarter today. It's trading 182.56 right now. 183 and a quarter should allow us to get out of about half of our position at a 50+% winner. Really, I'm looking, scanning the board here. Amazon is up a lot. Amazon's up almost 3%. Must have been my family and probably many years contributing to Prime Day. I know mine certainly did. Texas Instruments getting hit pretty hard ahead of earnings. They're also after the close today. So, all right. So while we're talking about earnings, guys, and I'm going to go to the screen here. Okay. While we're talking about earnings, let me bring up UPS here and just show you this awful looking chart. Look at this right here, everybody. Oh, man. Like I said, it's on track for its worst day ever. Here is a 2-year look. Boy, it has now broken down below any support at all. So what do you do here for an entry? You know what? I got to wait and see here. Even though these numbers were bad, guidance was bad, and the stock, is definitely taking it on the chin and paying for it. Got to stay on the sidelines until I see something technical to help me out here. Here's what I was talking about with Alphabet. I'm going to put this on a real slow chart, or a real 3-month chart here. Here we are right here. If we can get right to about here, then hopefully we'll be out of half of our position and we'll hold the other half through earnings. We actually have an upside calendar call spread on. So a slow grind to the upside here is a real good thing. Texas Instruments, boy, there was definitely an opportunity. I just didn't want to do it ahead of earnings, but quite frankly, there was definitely a possibility here to look at this resistance right around here on the 206, 207 area where it traded up to and take a short. But this will be a very pivotal area right here to look at. This 196 area, this red line that we see here, that's the 50-day moving average. So We got to look at that, see if that holds. If it does, we could see Texas right back at that 206, 207 area pretty quickly right now. Spotify is a big mover to the upside here. That thing's up over 11% today. And you can see this big, big gap. So what do we mean by this gap here? Well, those of you that have been in the room for a while, Prosper students for a while, we love looking at gaps and we love potentially trading on gaps. So a gap means where you see this area right here with no trade. Okay, where stock literally closes one day, opens the next day with no trade, big, big room in the middle here. What this indicates to us is if and when Spotify ever trades back down, it could be tomorrow, it could be next week, next month, it could be 3 years from now. If Spotify ever trades back down to where it closed yesterday, that'll be a pretty strong entry point for a reversal back higher. That's what's called a gap fill. Okay, so we are looking at that. Now, touched on a little bit of earnings. Anybody out there have a stock that you want to look at specific, whether it's for earnings or not? Anybody have anything that you want to take a look at it? Just throw it up here in the chat so we can all look at it together. I am more than happy to go over that. Man, it is hot down here on the floor. It is really muggy. I'm almost like dripping wet here. Yeah, and as you can see, let me pan the floor here. There's really not a lot going on here. These guys are just sitting around watching golf, maybe some replays from the Open Championship. Don, you want to look at HIMS? If I recall right, we've probably looked at that before for you, haven't we? Anyway, here's HIMS, and I want to say it's probably made a real nice move since the last time we looked at it. It definitely made a very nice pop here. Don, look where it came off of. Boomski. Right off of that 50-day moving average here. So that's a pretty bullish sign. There definitely is some resistance up here in this area. So if you got long it down here, okay, great. I would maybe watch for some potential profit taking up here. Now, I'm noticing something on HIMS that we just talked about. We talked about a gap fill, right? We talked about it in Spotify. Well, look at this right here. There's a gap back here. This is, what day is this? Let's see. This is May 17th, so about 2 months ago. Stock closed at 14.57, opened the following day at 15.96. So 14.57-ish area there, Don. If it traded way back down there, that would be, based on the gap fill theory, a real good entry place. Boris, let's take a look at Oracle, and then I want to talk about how the elections may impact the markets here. Okay, Oracle. Earnings are not for a while here. Okay, I look at this here, and I got to be honest with you, nothing that really stands out other than this kind of consolidation. Okay, definitely on their last earnings, gap fill there, big gap fill. So if it traded back down there, yeah, I probably want in. Lots of consolidation here. Honestly, for me, Boris, could go either way at this point here. Let's look to see what option premium or implied volatility is doing in Oracle. It's pretty cheap. It's pretty cheap. So, if you're going to play for a move either direction, up or down, not a bad time to put on a potential position that we talk about, which is called strangle swap or a double calendar, where you sell a call and a put maybe that expires in a week or 2 weeks, and buy that same strike call and put out further in the distance because option premium is cheap. It's on sale right now. Implied volatility is cheap. All right, guys, what I want to talk about right now is what is really on the forefront for everybody, and that's the elections. No, we're not going to get political. I am only going to present the facts to everybody, okay? There's no bias whatsoever in what I am discussing with you. Okay. The bottom line is, and let me put up a chart here. Hang with me. I know I got my charts somewhere. There it is. Okay. Okay. Everybody see that chart? I'm going to make that a little bit bigger. Okay. Great. So what this shows is, okay, how the markets have fared after presidential elections. And this goes back, I believe, to like 1948, 1949, so 75 years. Okay. And looking at that 3-month average returns following each election outcome, comparing those with 3 months, with the 3-month return, okay, during the entire time. So the other 3 years of the election cycle, same 3 months, okay? There's not a big difference whatsoever, okay? There is conventional wisdom, or what people think out there, um, controversial controversial to a lot of people, um, that if one side or the other, the Dems or the Republicans, sweep, meaning they take the presidency and they take both branches of Congress, the House and the Senate, okay, that is most likely to cause a market disruption. Okay, because most people think, well, if one side or the other, has all of the political power, man, that can really, really sway things. Okay, honestly, there is not a big statistical difference in that scenario versus any other scenario out there. Okay, what this data that's on the screen here, what this shows here, okay, is the market typically likes divided Congress, or divided outcomes of the White House and Congress. Why is that? Think about it, everybody. If there's division, and division, I don't mean that in a bad way. I just mean, people on both sides there. Typically, there's gridlock. Okay. The market doesn't mind that. The market doesn't mind when there's not big sweeping changes that could potentially affect, whether it's economically, whatever it may be. Okay. So typically a divided, either White House to Congress or even a divided Congress, is a good thing for the markets. Now, the best returns here, the best returns, okay, and this is 3 months after the election, best returns are when Democrats are in the White House and Republicans have full control of Congress. Okay. Next is Democrats control the White House and split between the Senate and the House of Representatives. Okay. The one that is actually below average, because most scenarios are, I mean, they're within spitting distance of each other, literally within statistical correlation of each other. The one outlier, okay, the one outlier is when Republicans are in the White House and the Democrats have full control of Congress. That period of returns in the marketplace has definitely lagged. Okay, so we don't know what's going to happen, right? We have no clue. We don't know what's going to happen tomorrow with everything going on in the political landscape right now, let alone what's going to happen in November. But if you go back 75 years, everybody, the bottom line is it doesn't really matter for the markets what happens in the elections. Okay, the bottom line is it comes down to economics, inflation, and over time that all gets smoothed out. Again, this is not my opinion on this whatsoever. This is actual statistical data. Okay, so if anybody has any questions on that, I am more than happy to go further into that. But again, just I think this, from the people I talk to, students, other people out on the street, even traders here in the pit, everybody has their own opinion of what's going to be better or worse for the markets. And the bottom line is, it really doesn't matter overall. I'm not going to say that there aren't certain sectors that could benefit from one side or the other being, in control. Overall, really doesn't matter. Doesn't mean that you shouldn't find out more information. Doesn't mean that you shouldn't delve more into it and, do all of your due diligence, but historically it does not matter. Okay. Somebody wanted to look at all. Is that all as in all state insurance? Who I actually just left them after a very, very long time with them personally. Steve, I'll be happy to look at Goldman Sachs as soon as we take a look at Allstate here. Insurance companies, man, they've had a tough go of it, but Allstate has recovered nicely off of these lows here. There was a pretty nice pattern here, and you guys know, that know me, I love my go-tos are 50-day moving averages, 200-day moving averages. Sometimes we'll look at 20-day moving averages. But this red line here, which is the 50-day moving average, look at all of this support. All of this support. And then so this is a 1-year chart. So basically 9 months worth. Boom, 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 boom. As soon as that stock came down there, it was a buy, right? Then it broke through. And now it's recovered again. That is a huge sign of strength. Huge sign of strength. Meaning, if it comes back down again, okay, and trades back towards the 50-day moving average, which is right now 164. Okay, and I know we're a ways away. Stock's trading 173 or so, 174. If it trades back down to the 50-day, that should be a really big line in the sand. Nice support. Okay, so Gertie, I hope that helps you out. Goldman Sachs, GS. I used to not be able to talk about GS at all because I'm a former Goldman Sachs official. Those of you that don't know, I actually was a vice president for Goldman Sachs and ran their S&P 500 operation right here at the SIBO for a while, where I traded in the pit with a lot of these guys here. The banks, boy, they have been off to the races. Goldman Sachs leading the charge. It is hard not to be bullish on these banks. Here's another one. If we look at, let me shorten up this time frame just a little bit here. Hang on. Okay, look at this pattern. 50, 50, 50, 50, 50, and boom, boom. Okay, so what does that mean here? Can it, is this stair step higher going to continue? It certainly looks like it to me. Where it's sitting right now, okay, right around this, I don't know, this 490-ish area, to me, I wouldn't do anything right here, okay? I wouldn't try and time that without having a reason to get in. But if we see a little bit of a sell-off in the banks, which could happen because these things have run very, very considerably, and we get close back down to this, 465 area or so, which is the 50-day moving average, yeah, that's where I would be really, really interested. Steve, hopefully that helps for you. Okay. What's going on? And finally, we get a little activity back here. It's more just garbage chatter than anything else. Come on, Google. Really need you to get back up there to that 183 and a quarter. Steve, what I just said is personally, I wouldn't do anything. Okay, Steve, yes, I wouldn't do anything here. But if you're looking for an entry point, I think that 50-day moving average presents a pretty compelling story there that could be a good entry point. Okay. What else? Come on, guys. Throw out some other stocks for me here. I do know Thursday, I'll be back down here on Thursday, there's a trader from the VIX pit, which is actually just to my right at about 1 o'clock or so. that is going to join us on the live stream. So if anybody has any really, really specific questions on how the VIX trades, strategies, whatever, we're going to have one of the traders in there from the VIX pit. Sure, Deborah, let's get to TSM. I actually just noticed something though real quick here. Was not on my radar earlier. Boeing, I'm not sure if there's news out there. Boeing up almost 4% today. That's a really, really big move. Um, is hovering right around the 50 here. This blue line that you see right here, that's actually the 200-day moving average. So if Boeing continues on the upside here, I would expect there to be some consolidation right around that 200-day moving average. Okay, Deborah, let's hit it. Let's hit TSM, which got really waxed after their earnings. Stock had taken off. Stock had flown for a month or so, but after their earnings end of last week, took a little bit of a hit. Not horrendous, but look where it came down to. Okay, look where it came down to, and look at this pattern. 50, 50, 50. Yeah, it broke it a little bit there, but recovered, and then right there. So, I don't know what you're looking to do, Deborah, but again, with the fact that there was all of this selling pressure because of earnings last week, that's what this blue E is for. That signifies that was earnings. With all that selling pressure there, and the stock held right at that 50-day moving average, that's pretty impressive. Let's see what option volatility, what implied vol is doing here. Okay, still kind of expensive. It's certainly come down considerably from earnings. That's this move you see right here. Okay, but still kind of expensive. That doesn't mean you can't do anything. There's certainly strategies for all types of scenarios. When vol's expensive, it's neutral, it's cheap, whatever it is. So just I'd be a little cautious about the volatility and the strategy you may use, but TSM certainly looks pretty decent there. Pinterest, and then John. John, how do you like those Leonid and Friends guys? Huh? Would you believe I actually had them down on the trading floor? But this was back pre-COVID, when they first came to the States, and we were in the building across the street from here. Right now, this pit, this trading floor that you see, even though it's the SIBO, Chicago Board Options Exchange, it's actually in the Board of Trade building. This was up until this opened just over a year ago. This trading floor. We used to be across the street in the SIBO building. I'll show you, John. Remind me to show you a picture of me and the band in the VIX pit over at the old SIBO building. All right. Pinterest. Earnings are next week. I think a week from today. Okay, so we got to be, kind of cautious of that. Right now, hovering just below this 50-day moving average here. Technically, there's nothing for me to really hang my hat on for a move higher or lower, which could potentially set up the possibility of doing one of those swaps where you sell both a call and a put the earnings week. So next week, collect a lot of premium because that earnings implied volatility is going to be really, really expensive, and then buy something further out. Okay, here's another big gap. Talking about gaps today. That seems to be the theme, and I'm not talking about the retailer gap, which, by the way, as an aside, my first trading pit ever on the floor of this exchange on the SIBO back in 1991, I was in the Gap and Delta pit. Gap Stores, Delta Airlines. Those are the two stocks that I first started trading back in 1992. Anyway, as an aside here, big gap down here. It would have to drop 20% or so to get down there. Up here though, boy, there's nothing really right there that kind of stands out at me. Trey, okay, Nvidia. Who doesn't want to look at Nvidia? Let's get this in here. I cannot believe how quiet it is here. These guys are literally watching replays from the Open Championship from last weekend. Come on, come on, Trey. You're very very welcome. You too, Deborah. Boy, this is a slow connection on the floor today. I'm telling you, it's because it's so darn hot. Okay, NVIDIA guys. Listen, if you trust, if you believe in looking at this 50-day moving average here, it's bouncing off there real nicely. It's bouncing off there real nicely. I wouldn't say that I would be completely super bullish here. I certainly wouldn't be bearish just looking at this. I certainly wouldn't be bearish. And also keep in mind, folks, when we're looking at these right now, because we're going through this so quickly, I certainly analyze way more deeply when we're looking at a directional play in a stock other than just using a quick glance at the 50 and the 200-day moving averages. These are really substantial, though. These are really substantial technical indicators, very easy to understand because there's a gazillion different indicators out there that you can use. My suggestion would be find the ones that you understand the most and that work for you and stick with it. Okay. I really like ANET, Trey, and I don't say that because we have a position on, which we do. Full disclosure here. Full disclosure. Okay. ANET has earnings next week also, next Tuesday. Okay. We got in right there. We got in with a position right when it was pretty much on that 50-day moving average. Okay. So we're looking for an upside move. We have I believe we have a 400 strike call calendar. So we'd be looking for a nice pop to the upside, either leading into earnings or on the earnings print. ARM is a really, really tough one, Steve. Why is it a tough one? Because it hasn't been around for a long time. Okay, there's not a ton of substantial data in ARM. The only thing that I would tell you from looking at this right here, looking at this chart, it's in a really nice tight range. It's going to break out of there, but it's in a really nice tight range. You can, really see this 150-ish up to, what is that, 180, 185 area. So what I would say is if it starts approaching either end there, the 150 or 185, I would look for a pretty explosive move. Right now, we're just kind of right in the middle of this channel. Okay, CMG after their massive split, which is why if you guys look here, okay, if you guys look at the strikes in CMG, you're going to see all these odd strikes. So we've got look at this, 52.8 strike, 53.6, 51.2. That's all because of the split that it just went through. Anyway, we've been really focusing in on this red line, which is the 50-day moving average. This blue line is even more powerful than the red line. This blue line is the 200-day moving average. That should be some pretty big support for this stock. They have earnings. They have earnings tomorrow after the close. Obviously, anything can happen. But there is, from a technical standpoint there, some very nice support. Benjamin, thanks so much for being here, Benjamin. And Trey, that is really appreciate that commentary. We appreciate you, and we are glad you're part of the Prosper family. Spread the love, spread the word. Spread the word. Really appreciate that. Guys, something else I want to throw out there, besides when we do these daily live streams and I give you the market updates from here and we go through, some stocks that you might want to look at, I want to hear from you. What do you want to hear on these live streams? Okay, what topics do you want me to talk about outside of just market updates, what's going on? I am going to be interviewing traders. Like I said, Thursday, I'm going to have a trader here from the VIX pit that is going to join me. But shoot me an email. Mike, if you could pop up an email or just post it up here in the chat, guys. If there's any topics you want to hear about, we want to bring it to you guys. Okay, this show is about you guys. You can give me mine. You can give him mine. Scott at Prosper Trading. You put that up there. Not afraid of getting bombarded. So if there's anything you guys would like to look at, again, feel free to email me. Open book over here. There we go. Okay. All right, everybody. Truly appreciate it. I can't believe it's 12:30 already. It's 30 minutes. Here we go. S&Ps literally haven't changed. So I'm going to be signing off here with the S&P literally trading in about a half a point range while we've been down here, which doesn't happen too often. Have a wonderful, wonderful day, everybody. Stay safe. Trade them well in the markets. We'll see you on Thursday.